Good morning, traders. Welcome to the TMT Stock Market Strategy video for Friday, August 7th. All right, we had some crazy price action yesterday, and you can see this on a 5-minute chart here, guys. Gap down, one candle down, sideways, one candle down again, and sure enough, the ECB comes out to rescue the markets because they're uncomfortable of where the markets were. And that's what's going on with the Federal Reserve. All of the central banks around the world playing games with our markets, and that's exactly what's happened here. Right back up and sideways all day. It's just insane the way this market's been going. We've gone nowhere for 3 full months, guys. And I'll show that to you in the charts again. But let's get right to it. I want to just show you a couple of good things here that I'm looking at. Today's non-farm payroll numbers, and I just wanted you to keep this in mind. We get a good number or a very strong number, market's going to sell off because of the fact that the interest rate hike is then pretty much inevitable, ready to go. If we get a real bad number or dismal number, markets are going to rally. So just keep that in mind. Now we have the VIX here. And every time when I see a VIX down at a 12 handle, you have to be very, very careful here. $12, very complacent. Market participants are very, very complacent. And when you get to these areas, you got to look for that explosive move to the upside. And that means that the market's headed lower. So just be careful with that one. Want to just show you the rates. And I've been mentioning that rates are moving higher. And we are starting and beginning an interest rate rising environment. That means that rates have made a generational low, and I do believe that. Here's that ascending triangle I showed you. I pointed out in early September. Measures up to 185. We sold off. We came right back. So that tells me that there's rates are moving higher. Watch the TLT. TLT right now to get short is not in a good spot. Once I see a little bit of movement to the upside, some sort of retracement, of course, I'll put that out to you again and get you some levels. Right now, here is WTI, crude oil, and I just want to show this to you here that we have extreme areas of resistance, and I mean extreme, meaning heavy, heavy area of resistance here. We also have that inverted head and shoulders at the upper end of this range. To me, I rather see this symmetrical triangle which broke out into the resistance. You can see the slow stochastic here, about way above 80, and even I dropped it down to a 63 is overbought. RSI is overbought here, so just use caution, guys. I wouldn't be adding or buying crude oil here at these areas. I look for a 40 back down to make a higher low, let it come back in, drift lower, and see if that pullback holds and makes a higher low from this previous low or even this area. And if that does hold, then as your back test, you're looking for higher prices. If not, I think you can see oil go all the way back down to $41, $42. Again, there's a ton of supply. And with the U.S. shale back online and producing oil, and you got minimum, I believe it's like 10 oil tankers out on the out in Europe. They're just parked, waiting for somewhere to go. So you got a lot of supply out there, and you got to be careful. Also, seasonality trends in crude oil peaks in October, so just keep that in mind as well. Now let me show you something else here. Why I feel that oil looks like it might be pulling back. Here's the UWTI. It's a triple. We have Fibonacci retracement at the 50% retracement. Okay. We have Fibonacci time extensions right here coming into that area of peak. And then we also have the Fibonacci circle, which is right here coming into resistance. Okay. Add all of that together in an overbought state. You have to use caution. All right. Next is going to be gold. We had a nice little move in gold. I said 1,300. If that doesn't hold, we'll get to the 38%. We did that. We took the 200-day out. Now we need to hold, all right, and turn back around today. If it does not get back above the 200, you get 2 closes below that 200, then I think you'll see the flush to 1220. Okay, with 1220 to 1212, which is the 50% retracement on the fib. Next is the GLD. Just wanted to show that to you guys. GLD right around here, hit our target of a double top. Okay, and again, I'm looking for some stabilization so we can look to buy gold. Next is GDX, 76% retracement right here. That just blew right out, and now we're looking. I like to see a 1920 print in GDX to start looking to nibble into it alongside. All right, let's get right into the indices. You can see here spiders. We're just really just doing nothing in this bear flag area. A little bit longer here. If it doesn't break, I'm going to just take that out and just even put. You could even see a little symmetrical triangle up here too as well. I mean, if you wanted to do this, you could do that, or better yet, even a descending triangle. But what I wanted to show you is the bigger picture, is this big bearish rising wedge that's happened and that's transformed. Now, it'll break below this lower trend line. We'll get a flush back down to the 210 area, if not bigger. But we have to break first below to get this bearish pattern to be validated. 60-minute spiders, you can see here, we have our 214 and a half, 212 and a half, and that's going to be the number to take us down to 210. Okay. Transports, just want to kind of show that to you here. We're stuck at the upper end of the range. Nothing wrong with this chart at all with the transports. And then we have IWM, literally 7 days sideways. We haven't gone anywhere. But we're at the upper end of the range, so that is a good sign. But look for these breakouts or breakdowns today, guys. Non-farm payroll should do it. And then again, same thing with the Qs here, okay? So 8:30 today, Eastern in the U.S., non-farm payroll numbers. Keep an eye out. It should be interesting and really should set the tone for this month. Have a great day and enjoy the weekend.